Hey everybody, Rob Maurer here, and in this episode we are continuing our discussion about Tesla's Q1 earnings report. This is the second episode today, so if you missed the previous episode, that covered the shareholder letter and the financials, and now we're going to talk about the biggest takeaways from the earnings call. If you did happen to miss part 1, the link for that will be in the show notes. I would recommend listening to that first. Alright, so those of you that listened to the earnings call know this was quite an earnings call, including Elon dropping the F word and calling some quarantining policies fascist, as well as an analyst really being hung out to dry when the entire earnings call dropped, leaving him to, after about 30 seconds, simply ask, hello? Which was probably the highlight for me. Instead of taking this sort of question by question, what I want to do is group these into my 5 biggest takeaways, and there are sort of sub-takeaways in here, but overall that's production status, Autopilot, batteries, progress in China, and long-term outlook. So I want to start with production status. This is one thing that I do expect to weigh a little bit on the stock. Obviously, earnings were strong and the reaction has been positive, but the uncertainty around production is putting more of a damper on earnings than what I believe it could have been if production status was more clear. Elon and Zach both touched on this in their opening comments. Elon was talking about how they continue to try to expand as quickly as possible, but then when he was talking about Model Y expanding in China and Gigafactory Berlin, he said it would also be expanding at Fremont, quote, when they will let us continue, end quote. Based on Tesla's previous communication when they actually initially shut down production at Fremont, it did seem like that was an optional move by Tesla, because in that note they said that they, quote, have honored the federal government's direction to continue operating, end quote, but that they were temporarily stopping production because of the challenges for employees, families, and suppliers. Obviously, that thought process does not fit with Elon here saying, quote, when they will let us continue, end quote. Then, obviously, later in the call, for those of you that listened, Elon was very vocal about his feelings about shelter-in-place orders. As I said, calling some of those policies fascist in nature. There will be plenty of headlines about that. I don't want to get super in the details here. Elon's point of view is that the shelter-in-place orders are causing more harm than they are good. It's killing a lot of businesses. He said Tesla would be able to weather the storm, but I think overall he framed his point best when he said, quote, everything people have worked for their whole life is being destroyed in real time, end quote. He specifically then called out suppliers, especially the smaller ones for Tesla, having a really difficult time. I think there's likely to be a lot of misinterpretation on Elon's point of view on this. He's definitely not saying that no action should be taken. He's just saying that what is being taken is overly oppressive and, in the end, net harmful. Obviously, this is a pretty polarizing topic, and there are good arguments, I think, on both sides. This episode isn't about that debate. Really, I'm just trying to give my interpretation of what Elon is expressing. Clearly, what he is expressing contains frustration around regulatory limits placed on Tesla or on their suppliers that are then limiting Tesla. Later in the call, Elon did make sure to point out that, quote, we are a bit worried about being able to resume production in the Bay Area, and that should be identified as a serious risk, end quote. So at this point, with Alameda County looking to extend the shelter-in-place order through May rather than ending it on May 3rd as originally scheduled, from the sound of it, it doesn't seem like Tesla will be able to restart production on May 4th like they had targeted. At least, that's how it seems to me at this point. Another note on production that I want to make sure to acknowledge, when Zach was discussing the production restart, he said that they need to work through how quickly they can ramp back up to prior levels from Fremont. So I think when we do eventually get a date for production restart, it's important to keep that in mind. That comment doesn't make it sound like they can just flip the switch and go back to producing at full speed right away. We had talked about that, and when I walked through Q2, I had said maybe that first week would be at 50% capacity. Seems like maybe that would be too aggressive based on this comment. I think that's it on production status, but again, probably the biggest negative overall from earnings. Second big takeaway here is on Autopilot, or autonomous driving in general. A few notes I want to point out on this topic. First off, in the opening comments, Elon pointed out that they're currently collecting intersection data at a rate of 1 million intersections per month from the fleet, and that as the fleet grows, they should be collecting 1 billion per month soon enough. So that's pretty cool. I mean, 35,000 intersections every single day, scaling up to eventually 35 million intersections every single day. That's a lot of training opportunity and a super strong positive feedback loop for Tesla. The other 2 points are on timeline and on margin expansion. So on timeline, Elon said he's extremely confident that home to office, quote, most of the time, end quote, with no interventions, should be happening by the end of this year. So obviously the next big feature we should be looking for from Autopilot would be the ability to navigate through turning through an intersection on its own. And at least in terms of functionality, that really is sort of the last big missing piece of being able to achieve what Elon is talking about here. From there, Elon said probably a robotaxi functioning on a Tesla network would be sometime in 2021. I don't think that's too different from the previous timelines he communicated around that. The second thing I mentioned there was margin expansion. So this is something we've talked about a lot. We actually got a little bit more information on this with Zach saying that for the full self-driving option, roughly half of that comes in as revenue, and then the other half right now is currently deferred. That was interesting because I don't think Tesla has given us that split before. And of course, over time, as Tesla ships more features, the portion that is deferred becomes less. Also interestingly here, they talked about a full self-driving subscription. We had seen the code for this pop up from Very Green a few days ago, so not terribly surprising. The code has been in the vehicles for I think around a year. But in response to one of the institutional investor questions, Elon said that they will probably be implementing that full self-driving subscription as an option towards the end of the year, but that he really believes for most people it's going to make a lot more sense to actually fully purchase the option and that that will be a good investment for them. Zach mentioned that in the case of leasing, if you were to purchase the option and roll it into your lease, the additional cost on your lease would be less than the full self-driving subscription would be to rent month to month. Regardless though, I do think that subscription option will appeal to a lot of people. And Elon mentioned, of course, that some owners have already purchased, but didn't opt for full self-driving at that time. This subscription option might give them a nice option. Around that same idea, there are so many cars out there that did not opt for the full self-driving option that if the feature becomes more compelling, may choose to upgrade. Elon pointed out on the call that that isn't captured in deferred revenue, obviously, but there's clearly value there. Some people are going to do that, and Elon put it well when he said it was deferred potential. So overall, there's just a plethora of tailwinds for Tesla to ride as the Autopilot feature set becomes more robust, more reliable, and more competent. Takeaway number 3, this is all around batteries. Again, a lot of sub-points here, but we'll start with Battery Day. Elon said this will probably happen the 3rd week of May. There's still uncertainty around that date, but he said he thinks it's going to be, quote, one of the most exciting days in Tesla's history, end quote. They said this will either be happening in California or Texas, quote, depending on what we're allowed to do, end quote. So the first time I heard them mention California and Texas, I thought, oh, Gigafactory Texas. Like that seems like a clear hint at Tesla doing that. But when I listened again, I then picked up on the depending on what we're allowed to do angle. And I think Tesla would have it in Texas if California doesn't allow them to have it in California. Now, I do still think Texas is a likely landing spot for the next Gigafactory, but I don't necessarily think this was a hint. On Gigafactories, Elon said that they could potentially announce the next Gigafactory as soon as next month. Not that that was his prediction, but was a possibility, though he did say it would certainly be within 3 months, and of course this would be in the US. As we know, one of the Say.com questions was around future Gigafactories. We didn't get a whole lot on that. Elon said he's not sure how many Gigafactories there would be in 5 years, but that there would be several more than today, most likely. In terms of their battery strategy, they did get a couple of questions here, specifically around cell strategy, but the answers really, unsurprisingly, just were teasers for Battery Day. They said they would talk more about how they're approaching all of their battery strategy, just trying to figure out what's best for the products and for the long run, but also mentioning that reducing the cost of investments for new cell capacity would be something they would specifically be addressing at Battery Day. Fourth big takeaway here is the importance of China, and we can probably throw Gigafactory Berlin in on this, but they talked a lot about China, especially around the costs. They have made rapid progress, obviously, as the margins have showed, on lowering production costs in China, but they made a surprise announcement on the earnings call that they will be reducing the price of the standard range Model 3 tomorrow to be below the 300,000 yuan subsidy limit. So that's going to be about an 8% decrease to the base price of the vehicle, I think. Despite that, Elon said that they feel confident that that will be a vehicle that still delivers a good gross margin. So I said I couldn't emphasize this enough in the last episode. We're coming back to it here. The margins from China are incredibly important. The costs are going to come down. Tesla's going to be able to lower the price, and that's going to drive volume. What does volume drive? Lower costs. Tesla said even with this lower price, that margins from China will continue to expand. The other point they made on this localized production, both for China and for Gigafactory Berlin, is the opportunity for the localized cash conversion cycle. This is really huge for a company when they are growing production and growing deliveries because they get paid up front from customers, but they don't have to pay suppliers for, let's say, 60 days or 90 days. Tesla gets to utilize that cash in the meantime as working capital. That's beneficial all the time, but especially so when you're growing deliveries, that has an outsized impact on your cash flow. just another thing to look forward to watching materialize. Fifth big takeaway here is the long-term outlook, and then I do have a couple quick hitters at the end. But on the long-term outlook, things are intact. Tesla has said that they have taken this opportunity to reassess, and they've decided to continue expansion at full speed, perhaps from the sound of their commentary being even more aggressive, but definitely no slowing down in Shanghai, no slowing down for Berlin, no slowing down in Fremont to the best of their control. Elon said, quote, "While many other companies are cutting back on investment, we are doing the opposite. We are absolutely pedal to the metal on new products and expanding the company," end quote. No surprise to see that. Tesla's lead in this environment expands. Elon did drop a fun little tidbit about next year, saying he's looking forward to Tesla being a truly global manufacturer with factories in North America, China, and Europe, with capacity of well over 1 million vehicles per year next year. Now, that may seem like a lot, but Tesla said that the production rate from Shanghai should be 4,000 per week by mid-2020, so that's 200,000 a year. They say that Model 3 and Model Y from Fremont should be 500,000 a year at a similar time. They list S and X as 90,000 per year out of Fremont. So sum all those up and you're already at 800,000 in terms of installed capacity. That's in a few months. I don't think people really have processed how quickly Tesla has been able to grow production. It's been crazy. So that portended nicely into my question about the long-term growth rate, whether 50% was likely with 4 million plus vehicles in 2025 and 20 million plus vehicles in 2030, or if 40% was a more realistic target. I liked Elon's answer here. It wasn't necessarily the most exciting in terms of how he could have phrased it, but he said it's difficult to predict the macro environment, but in the absence of a force majeure, he thinks that 50% is the likely number. Possible that it's 40%, but that he would be very shocked if it's less than 40%, even factoring in forces majeure with the exception of something like World War III. All right, so let's just look at that quickly because I think people, again, are underappreciating this. 50% growth from the base of 2019's 368,000 deliveries means 4.2 million vehicles in 2025 and 31.8 million vehicles in 2030. That is what Elon says he believes is likely. So what happens then if we drop that number down to 40% compound annual growth instead of 50%? Well, in 2025, we're at 2.8 million vehicles, and by 2030, at 14.9 million. So Elon just said he'll be very shocked if within 10 years, Tesla is not producing at least 15 million vehicles per year. Volkswagen produced the most vehicles in 2019 at about 10.8 million. Most analysts today are modeling for 2 to 4 million vehicles for 2030. Tesla at this stage is already expanding capacity by, let's call it 500,000 per year. Even if Tesla doesn't improve on that at all, in 10 years, you're looking at more than 5 million, probably 6 million vehicles per year. But Tesla's not going to not improve. So yeah, the long-term outlook is good. The other thing that I'll throw in here is a point on demand. Zach did mention that they exited Q4 despite a lot of tax credit changes at the end of the quarter with the highest order backlog they have ever had. Obviously still macro uncertainty, but nice to have that data point. So those were the 5 big takeaways for me, and then just a couple quick hitters here. Tesla said that the Model S range is actually now 400 miles, likely on the EPA test cycle, but the EPA test that was done, which yielded 391 miles, was done after the car had actually lost 2% of range overnight because the EPA had left the door open and the key in the vehicle, so the car was in wait for driver mode. So as soon as the EPA test offices open, Tesla will retest, and the Model S range should become above 400 miles. So super exciting milestone there. And then on the solar roof, Elon talked about how for them at this point, production is looking good. The biggest bottleneck is really the installation teams. So they're working on building those out, both first party and third party. But demand is good, production is good, and they should be installing 1,000 per week within a year, maybe by the end of this year, weather permitting. And Elon is still confident that this will be a very significant part of the company over time. Couple of other things on energy. Elon said he would be extremely excited to build an HVAC system with great filtering that could potentially capture the water condensation given off by that system. Tesla's got a lot of good ideas around that, but it's just a matter of prioritizing at this point. And a similar response to the question on whether or not Tesla would consider acquiring utilities. Tesla said the plate is full. It's not out of the question, but they haven't really thought about that yet. So, I think that is it. Again, if you didn't check out the previous episode, I'll link to that in the show notes. I would strongly encourage that, but that'll wrap it up for earnings day. Congrats again to Tesla on a great first quarter. If you do appreciate what I'm doing here, I would love your support. You can find more details about doing that at patreon.com/Tesla Daily Podcast. Don't forget to subscribe, sign up for notifications, and I will see you next time. Thank you.